All right. So let's, I want to continue kind of documenting this morning, continuing to look at the markets here. So we are, again, we got that move into the 5 EMA here, all bullish on the 30-minute chart. Very likely that we hit some resistance here. We had a little bit of a signal there. It came back to the falling 8. You can see it's bounced off pretty hard. And now we can kind of see as we get to this, oh, is that the upper, what is that, 3707? What is that? Oh, I must have the 5 EMA pink on here. Let me just double check, because that's usually the Keltner channel. Okay, HTMA 5 EMA day. Yep, okay. Let me make sure that I have that green. Yeah, and obviously the good thing about this is you can definitely, I would encourage you to play around with something that feels comfortable for you. Like I know some people have just changed the background to white and then they change all the white stuff to like green. And then, I have the Keltner channels, that purple pink color. So I just want to make sure that that wasn't a Keltner channel. So one thing here is that, we got a pretty strong market today. We're coming off of very low levels. We got some short covering today. And we're kind of, we're coming up against a hard level here. So we'll see if there is a, potential call credit spread. But the other thing too that I have not added in here, and this is something too, where we talk about that kind of 1% level. Well, if we're also up 1% on the day, we do want to focus on buying pullbacks. And then if we're down 1% on the day, kind of the reverse too. So we'll, those are all kind of things that we'll pick up. It is likely here though that we stall out. So I do want to watch this as a potential area to sell a call credit spread. But, again, we've got Powell speaking today. Sometimes trading too is just like take the easy setup and then, don't, no need to push your luck. But you can see we're actually, I wonder if gold's actually moving today. Gold up 31, silver, yeah. So we're finally seeing the dollar coming down. So, oh wow, the dollar's down $1. That's a huge move. So finally, I think the markets were on the verge of collapsing last night. And so Powell's obviously a little shaken. The credit markets were like locking up. People were freaking out. And so Powell's obviously walking that back. I don't even know what he said. So pretty boisterous action there. So on something like this now, we'll see how we set up here at this 5 EMA. Now, had we sold this call credit spread, you can see like when you kind of come down to the moving average, the idea is, that's kind of where, if it was a directional trade, that's kind of like where you'd want to take it off is that 8 EMA. Ideally, you can kind of get down to the 21. But yeah, we'll see how this sets up here, and I'll watch it for a potential another setup here. Super strong action here. Now, this is the thing too. So here's the other thing, and I think this is important. So I'm going to make this as a note, because this is also kind of a couple of notes, to kind of keep in mind. Trading notes. Okay, so here's the thing. With this setup and SPX spreads, it doesn't really matter. Doesn't really matter if stocks have a big up day or big down day in order to meet your daily goal of 2% to 5% of NLV. You can still meet that on a day where the SPX is plus or minus 10 or 20 points on the day. In other words, we don't need big moves to make money. Okay. That also frees us up from having to chase, from us having to think we need to chase big moves to make money. And this is for me, it's a huge thing. It's just like, look, if you're if you get your arms wrapped around the idea that if you're consistent and you can make, say, 2% of your net liquidating value trading on average each day, then all of a sudden, you know, trying to catch big moves, trying to be right, trying to catch everything, it's irrelevant. Just, did you make your cash? So that's another thing too, where I found, like, there might be a day where the S&Ps are down 100 points or up 100 points, or they ended up at 12, but the NLV cash in pocket is about the same every day. The strategies don't change. So that part I think is kind of nice. So, and it's so I'm certainly watching this here. Now, the next thing, then the other question is kind of like, okay, well, at some point, do we have to short this? Well, we'd obviously want to see signals first. We are 1% away, and we want to take into account things like, Powell's talking and stuff like that too. But we can certainly look, we can certainly look at it. But then at some point, during the day too, and usually typically between about 11:30 and 1:30, I don't really do any trades. So that's the other part of this. I generally take 1 to 2 trades between 8:30 a.m. Central and 11:30 a.m. Central. 11:30 a.m. Central. Then take a break, workout, etc., from 11:30 to 1:30. Then look for cherry on top trades for the last hour, meaning trades where I'm risking less than I was in the morning, but have the potential for bigger rewards. Butterflies, etc. The goal is to get in a consistent groove in terms of cranking out your daily cash goals. SPX options work great for this, but if you like to trade Tesla, you could use Tesla or ES or SPY, etc. The main thing here is to focus on your daily cash goals and not on trying to catch every move in the market. Those are opposing goals. Get clear on what you want, not what your ego wants. So all that stuff is a part of this, is just kind of getting clean and clear on all that. Big moving days. If the ES, SPX, or NQ, NDX are up or down over 1.0%, keep in mind that it is likely a day where that pressure will stay on, meaning such as today, as I'm writing this, we are up 1.52% on the SPX. I can set up a call credit spread to when it is extended beyond 0.75% from that 21 EMA on the 30-minute chart. I can also wait to see if we get a move back to that 21 EMA on 30-minute chart to do a continuation trade. Either is fine. If we are under 1%, that counter trend move is generally easier. So moving days. That is a personal preference. If you aren't a fan of, if you aren't a fan of, what's the right word here? If you aren't a fan of fighting the markets, then on days when the indexes are over 1%, then just wait for pullbacks to do continuation trades. Note. So that's kind of a preference. I don't mind either way. Especially on big down days, you oftentimes get some big reversals in the afternoon. So it just kind of depends on your personal preference. And just keep in mind at the end of the day, the goal is to make the cash. Oh, thank you. Yeah, I'll get through there. And so if we're looking at this here, it's like, okay, we did come up to the 5 EMA. We're certainly seeing some selling, but we are also at 11:30. Okay, and around 11:30 to 1:30, I do think it is important to take a pause. And then when you come back, you can kind of see what you missed. And we will do. I certainly will be looking at some trades, later today, and we'll see too as the stuff heads up. Okay, but let me document a few things here. And again, I'm just kind of curious on the markets. Yeah, 3,700 is a big level too. That's a big level. All right. So then we get. All right, so we added that. Let me see what we got in here. Okay, yeah, so let's finish documenting this. Okay, so this is kind of a good example too of like, okay, we had to take some heat as the SPX moved against us, but it was only like $1 of heat on the spread. Note that we did not get any sell arrows or dots on the 5-minute rotation SD chart. When we did pull back to the 8 EMA on the 15-minute chart, we could see the rotation higher on the 1 minute, and we then continued the move. Okay, so shape. I'm just Here, there we go. And okay. Okay, then blur. Once price started to move higher, premium decay happened quickly, and our target of 40% of the credit received at 270 was hit. Yes, had we kept holding on, we would have made more money, but we would also have had a lot more at risk. Hint, if the market looks strong, still close it out and then roll up to a new in the money, put credit spread so that the risk and reward is in your favor, both against you and with you. Meaning, if suddenly, if you have $1, if you have, meaning if, what am I trying to say? Meaning if you're $1, so $1 credit remaining on your original spread, could easily turn into a big loss if the market were to turn quickly against you. However, if you had been in a new rolled up spread, you would have been able to handle the loss. So again, this goes back to the structure of the options. Once your option gets out of the money and you get that 40% credit, the danger of holding on increases exponentially. So it's like, had we still been holding on, it's like, oh wow, we, instead of 270, we could get out at $1.70 here. But the danger of holding on becomes, exponential. And that's, the whole point of this is we don't want a lot of danger. Danger, Will Robinson. Okay. Contract specifics for my smaller 50K account. I trade one contract per $10,000 in the account. So I did with spreads at $10 wide. So for the 50K account, did a 5-lot spread, $10 wide. My larger account, I do one contract per $20,000 with spreads $25 wide. Same idea, as they are both in the money. With larger size, with larger size, I would rather do 100. See, I'd rather do, what am I trying to say here? I would rather do one contract $10 wide than 10 contracts $1 wide. It's about the same risk to reward ratio, but cheaper commissions. And the dirty little secret of market makers, I generally shy away from $5 wide spreads. Let's see. The options that are close to your sold strike hold on to their value pretty good. Benefit of $25 wide is that those out of the money long options lose value very fast, making the trade profitable quickly should it grind in your favor. You get a little of this with $10 wide as well. Last, the reason I go in the money for spreads the first 2 hours of the day is that if I'm wrong, the way the premium works, the spread will go against me about $1 for a $20 move in the SPX. This is very easy to hold on to. And once your sold option hits at the money status and goes out of the money, the way the premium works is the decay accelerates in your favor. So it helps you both ways. This is not true after about noon central. Then if it goes against you, it will hurt. So I do different trades in the afternoon. And we'll cover that obviously when we get there. Okay. And then the other nice thing about 40% profit goals, if you do get a move, get an average move away from key moving averages, your target usually hits. And this means you are out before sell signals happen. If there was red dots on the 5-minute chart and my target had not been hit, I would ease out of the trade. So, and what's nice about this is that, we cover a lot, but at the end of the day, this is an index card. It's like, oh, what do I do? Well, here's your index card. Okay, there. All right, and then what about directional trades? Although I will do directional trades once in a while, by far my first choice is 0 DTE expiration trades on SPX. They are way more forgiving. They are way more forgiving, giving, and easier to manage. And you can do larger size, which equates to similar profit potential catching a directional move. Plus, you are able to more easily hold on to a trade against you. If I do directional, I will. Okay, so what about exits? When I do directional, if it is a snap trade, then I will exit when we come back to the 21 EMA on the 30-minute chart with a stop in place in case wrong. Usually, I'll see reversal dots and arrows on the 5-minute chart that get me out before a stop is hit. For a continuation trade, when we are about 0.75% away from that 21 EMA, I start to trail stop, as that is an area where it is likely to turn. So bottom line, boot directional trades. I do them. They are harder. These days, 80% of my trades are SPX options. So, everybody can kind of choose their own adventure. I always say, if what you're doing is working and you're generating your cash goals, keep doing it. If it's not, if you're making money one day, losing it the next, making money 5 days in a row, and then giving it all back day 6, it's not working, right? So you want to be honest about that. And so that's the kind of stuff that you can kind of look at and structure and all that kind of stuff too. Yeah. So yeah, I'm gonna and this is a thought too, and DSI just kind of hit it. Bottom line, and DSI, I'm going to add your quote here. AHA for me and DSI is one could just use this quick hit strategy every day in any market on the SPX and be on a consistent path to daily cash goals with a few hours each day. This is hard for me to wrap my arms around as a trader. Wait, Tesla is moving. Wait, what if there is another big move? But wait, who cares? Grab the cash and go live your life. So anyway, that's really the point of this, is that, you know, we don't have to catch every move. And if the S&Ps are up 100 points, great. You know, or if they're down 10 points, our daily goal doesn't change. And I think that's important because we don't want to force things that aren't there. You know, what we will look at, and maybe later today, but also, you know, possibly, well, definitely the next time around, is that, you know, are there setups where it makes sense to do, you know, like, okay, I'm going to throw on an out of the money call debit spread for 3 days from now because I think we're going to puke or I think we're going to rally. And certainly you can do that. And that comes from, you know, like here, we've had, you know, this daily squeeze, you know, we're sitting here off of, you know, key support, you know, 3650, we're starting to get arrows. Then, yeah, you know, we could throw on a cheap call debit spread. And so and I do that sometimes. And what I found is that sometimes it's great and sometimes it sucks. And when it's, you know, when it's great, it's great. When it sucks, it's annoying because then I got to try to make up those losses with my credit spreads. So I'm doing them less and less. What I do like to do is, okay, so here's a trade that I think that I like, right? I think we have the chance to get back to 4,000, okay, by October monthly expiration. All right, so if if I absolutely knew we were going to get to 4,000, obviously that would be one thing. But let me look at what's the right one here. So not AM. October. Well, let me just do this one. What's the Friday expiration? Is it the 23rd or October 21st? Yeah, October 21st. That's the AM expiration. Okay. Okay. So let's say I think it's going to go to 4,000. Okay. So what do? I could buy a 37, 23 days away. So I could buy a 3,700 at the money call, and that would cost me, you know, $11,000 per contract. Right. So we got to rally a lot just to make up that premium decay. I could, like, oh, you know what? I think I'm going to buy, if I think it's going to go to 4,000, why don't I buy an out of the money call debit spread that's pretty wide? So the 3,800, 3,900. Man, that's super far out of the money. What does this look like? What does this look like here? And it's like, yeah, it's not that cheap, and your max profit would be 100 in this case. So you're risking, on a per contract basis, that $3,300 for that, right? So, or you could go further out of the money, but then the odds of success get even lower. And so one thing I found on something like this is I'll go to the 4,000, let's see, we don't need to get all the strikes. So, what's a trade here that, isn't going to, like, so the main thing is how these days, how do we catch a big trade? And if we're not right, it doesn't ruin our daily cash flow goals. Okay. And this is where, doing a butterfly or an unbalanced fly makes a lot of sense. So here's the 4,000 strike, right? Now, I could do a call debit spread here and it's $5 wide and it would cost me like, what, $1? Okay. But that's not that interesting either. It's like, okay, I'm going to, a 300 point move for a $3 trade. So a butterfly is a way to kind of finance it. So, you do buy a butterfly, and it's like, okay, so it's 5 cents, right? Let's say that I did 100 contracts, and let's say I could get filled. Let's say I could get filled at 15 cents, 100 contracts. So my max risk is $1,500 against a max profit of 48,000. Okay, well now all of a sudden that's getting interesting. One thing here though is that you will not be able to take this off for a profit until the day of expiration. If we went to 4,000 tomorrow, this would still be 15 cents. So that's one thing that sucks about that. So one way around that is to widen it out. And it's like, all right, I'm gonna do 39.75, 40.25. What does this look like? And so now it's not nearly, it's like, it's not going to be as cheap. Let's call it 75 cents. And obviously, I'm not going to do 100 contracts in this account. So, would I do 10 contracts? Okay, so if this doesn't work, I'm going to lose 750 bucks. If it does work, I'm going to make, I could make 24,000. Okay, so that's interesting too. But then where it gets really interesting is if you do what's called an unbalanced fly. And then essentially you can sometimes buy the stuff for a credit. I don't know if this one will be available for a credit or not. But let's say 39.75, 4,000, 4,025. Oops, 4,025. So it's like, okay, so now I can get into this for a credit. And if it doesn't work, like if we stay here at 3,700, I get to keep the credit. And then if we do come all the way up to 4,000, then I have the potential for a big trade. Now, the danger is it blows through 4,000 and it blows through 40.25. But look, if it gets to 4,000, you can take it off, right? So anyway, I like stuff like that where if I'm going to try, on this particular trade, if I did 100 contracts, I'm going to get a credit for it, and then I could make 260 grand if it worked, and I get a credit of $17,000. So stuff like that I like, but you do, just have to know how to manage it and stuff like that. So little things like that. So anyway, so when we're talking about big trades, I'm not really interested in like, oh my God, let's buy calls 30 days out and hope it works. In this environment, I'm not too interested in that. Now we're kind of going into chop mode. All right, so let's do this. Eric's going to come on here in a few minutes. If you guys want to take a quick switcheroo break, I'm gonna hang out for his session too, because I always learn stuff when Eric's doing it. But let's all grab a minute. We can grab a coffee, run to the bathroom. We'll listen to Eric. Then we'll have a lunch break. And I'm watching the markets here. I do anticipate that we're going to do another trade today. During this time, this is the time to kind of like, let's go work out, et cetera, et cetera. The market's very strong here. It's going to be interesting to see where we close and all that kind of fun stuff. And then you'll kind of go from there. So let me put up a little note here. And I'm going to be continuing to work on that PowerPoint. Quick break. Back at 12 noon Central with Eric. Post Eric lunch. Then I'll be back on the mic at 2 p.m. Central for the close. If any trades set up, I will post. We will be around to answer questions, etc. All right, we'll be back in a few minutes with Eric.